Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb, bomb, bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so
open a cold one because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Stockman's.
Good morning, everybody. Good morning. Hey, we're going to start this stream off with some really good news here. Carl Hungus, one of the lead traders of the Magic Hour. It's the pre-market session that we have in the pack here with a few people, Carl, Drez, and Eldianis. 2 times cash flow trades for Magic Hour, 228, holding 3 micros for the P12 high, and my final combine for a full top 5 funded accounts at TopStep. Let's freaking go. Heck yeah. More Mickey.
Good morning. How's everybody's weekend? What'd you do? Did you go do something? Did you study something? Did you just sit there and have a lazy day, a lazy weekend? You put up your Christmas tree and start blasting Mariah Carey, All I Want for Christmas? Like, what'd you do this weekend, ladies and gentlemen?
Yeah, let us know in the chat. I think one thing that I heard that YouTube loves to do is the more activity in the chat, the more it pumps out to other people. And so we got how many people we got? We have 42. I see on my end 42 people watching. I want to see 42 different things that you guys did this weekend.
Is that a thing, really? Like, so it even tracks like how many people that talk in your chat while you're live?
Yeah, I think the chatter, like the more the chat is, I think I don't know, it's like activity. That's just something I heard. It could be complete nonsense. I don't know, but
The nation's harbor. I don't know. Who cares? Like, if
national.
they're meant to listen, that's the great thing about what we do is, like, if they're meant to be in our community, they'll find their way,
Yeah.
and then they'll never leave, ever.
Ever. Wes went to watch the old school Gladiator. Yeah, I watched the new one, dude. That thing sucked.
It was horrible.
Bro, it was like why does every new thing or a sequel to something always suck? Is it just that we get so cling to the nostalgia?
Yeah. Now, I did the Naked Gun, the second one, the newer one, which is just, it's kind of like Happy Gilmore. The second one is so stupid that it aligns with the first one. The Naked Gun was the same way.
Got All I Want for Christmas is consistent. We got Quant Scott. I like that name, Quant Scott. Mostly focused on reading and resting. Yesterday I worked on some notebooks in Google Colab. Nice.
Ooh, this is leave time. That's the worst, dude. Like, anybody who has a bad back knows the pain of gathering leaves and bagging them up. And then, like, as a man, it's embarrassing because, like, you either stand like a man and you bend over and pick up the leaves and put them in the trash bag, but then eventually, after a couple hours, your back's going to give out. So now you're in your front yard on your hands and knees as a grown-ass man trying to pick up leaves and put them in the trash bag. Leaves, I'd pay somebody to do that shit. I'll be damned if I look vulnerable in front of my neighbors.
Sitting there. All right, let's get it. I know you said, Mickey, you had a phone. Do you want to go first this morning and kind of go through what you're seeing, and then
Yeah,
I'll
man,
just
let's
nip
do
off?
it.
Okay.
Let's do it. Let me share screen real quick. I have not done that yet. Yeah, there's something at some point in your life, you get these certain tasks that you're like, I'm not doing that. I don't give a damn. Right? Picking up leaves is I don't give a damn because it always leads to the same thing. So starting on the daily chart, right? We're above NFP Friday, we're above previous month 50, right? Notice that every single month we've had this same signature happen, right? Over and over and over again. And we can't get proper follow through for that quarterly pullback, so we don't expect it, right? But using Thursday and Fridays, you know, how the open, high, low, close, we can see that since 1800 on Friday, you've got the same probabilities. You know that as 87% probability that we close above previous day high. There's a 78% that we close above previous day open, so Globex open. And then there's a 47 and a 58 that we close below previous day high and low. So the highest probable area for us to close, right, is going to be between the open and close of Friday. However, right, we can see that just on the daily chart that live price is disagreeing with it. So we're going to go to our intraday models to, see what really to anticipate, right? Because we've already taken out previous day high, right? We're already working our way to the upside to make the high of the week, maybe. Who knows, right? So we come over here and we can see that we had a trending overnight, meaning the Tokyo markets bought it up. The Frankfurt and the London markets bought it up, right? And so now we're set up for a really nice firecracker to the downside, right? So we went long out of New York 1. So let's pull over and see what levels are going to matter today that we're going to pay attention to, right? From a 12-hour approach, you guys know that right now there's a problem that we have to solve. Is this the MAE, or has the MAE for the 12-hour yet to come before we start distributing the MFE? And we can see that from a data approach, the last 15 Mondays, right, is either the 6 o'clock or the 9:30, right? Now, we haven't been able to show momentum above the MAE box on either side, so it can go either way, right? So we're expecting to pay attention to that. Now, we went long out of New York 1, so we went long, true, all, right? So we had got a couple and then things that we can look at. Right now, we can see that there's a 62% probability of going false in New York 1, meaning we will come back and take this out, this low, right, by 11:30. There's a 37% probability that we won't. Right now, we know, like the 4-step reversal and when we use it. That's something I teach in the boot camp. So coming down to the high day, low day before choosing long true or long false, we can see that from a low day perspective, the 1800 low of the day is the highest probability, regardless. Like, so if I switch this to false, right, we can see 1800 low days in. If I switch this to true, 1800 low days in, right? So that's not a factor. Right now, what the factor is because we spent 300 handles and our 10-day median range is 465. When is the high of the day, right? We can see there's a mode at 9:30 to 9:45, like so 10:15 for the high of the day. And then we sit there in range between P12 high and P12 mid, or, right, the high of the day will come at the end of the day, right? We know that we've already hit the high of the day mode to median because we're up 1% before market open, right? So now, going back to this probability right here, knowing that there's 62% probability this turning false, we're going to select false and look at these levels, which we use the Asia OU, the P12 mid, and the London OU to see when we start pulling back, right? Because we're expecting the highest probable structure to be like this, right? Playing it high, start heading down for the morning session, right? What the afternoon does is we'll wait for 11:30 to 12:30, right? So now we're going to look at the probabilities of London and Asia, right? We can see that with a long true, long false scenario, that Asia's only got a 63% probability. But out of that 63, we get majority of the data of it being retraced between 9:30 and 10:15. So we get the 4-step reversal for the false and get below 9:30. This is definitely a target. We can see London has an 85% probability, and that primary mode of getting hit is between 9:30 and 10:15. So that's a primary target. This would be like a yay target. This would be, okay, this is what I'm actually going to target. Coming over here, right, we use the P12 levels. We can see that the P12 mid, which has not been touched, has an 82% probability with his primary time of being touched between 9:30 and, like 10:30, right? So that is also a target, right? So right now, right, we have a 420 high a day, so that's fun. So we'd like to see if this is the sequence that it's going to do. Come up, make a new high a day between 9:30 and 9:45, do a 4-step reversal, and then come to London OU, bounce to head higher, or go to P12 mid, bounce to go higher in the afternoon. If we come down to Asia, then this low of the day is now jeopardized, right? So I'm like I said, like it'll be obvious when we get around these levels from a time standpoint. Like we hit London OU around 9:30 to 9:45. We pay attention to the bounce for that 9:45 reversal. If we hit P12 mid at around 10 o'clock, right? We're expecting like for it to touch and then start breaking up to the upside for that 10 o'clock hour if that's where it's going to bounce. But if we're at Asia OU, then we need to think a little bit more strategic about taking any longs from here, right? So I'm taking shorts. Like 9:30 to 9:44 would be regular 9:30 to 9:44 trading for me. Both sides are turned on. But, right, as we come down after 9:45, I will be looking at London OU and P12 mid to see how they're playing, right? Another level I'll be paying attention to today is the 6 o'clock level because we're so close to it. All right, and that is right here, which we're approaching right now. Why? Because at the end of the day, my job is to figure out, are we putting the MAE for the next 06 to 12 or 06 to 1800? Are we putting it in to distribute lower? Or are we going to come make a low and bounce off of London OU or P12 mid to head higher and end the day somewhere higher in here? So that's the plan that I'm basing it off of. Definitely can see this scenario happening because we've seen it so many times, the firecracker back down. But then as we hit these levels, I'll be paying attention to what time, how does it sync in with the 3-hour line, how does it sync in with this 12-hour MAE to MFB and all that, right? But that's me, boss. One thing that we do know, right, is that there's more probability to close below previous day high than to close above it. Now it's a game of momentum. Does live price want to agree with this 58% probability, or does it like, dude, I care about the 42%? So that's me right now. Passing it back off to you, Austin.
Yeah, I think I think today's a prime firecracker, man.
You and me both.
Especially with that, even you kind of put the icing on the cake the previous day high, and then
Yep.
if you guys see here, I'm on the 1 minute, and that would get us all the way down here to
Settlement on a Monday.
settlement. Yeah, yep.
And we know that that's a high probability fill on a Monday. But it used to be. It's kind of losing its edge in the local market because we've been so strong.
Yeah, just less reversions. You know, we've been making, I mean, so many directional moves. It's been beautiful. Yep. Yeah. Well, going into a little bit just to piggyback off of Mickey's stuff is, and for those of you that are new here, we like to call this trade setup the firecracker, and that's when we're stacking a lot of statistics in a single direction. And so we can see today there's a couple indicators here that we have in the pack that kind of gives us just a little bit more edge, or a little bit more icing on the cake of what you guys have already seen. And that's, we have 1, 2, 3, 4, 5, 6, 7, 8 bearish levels. So when they're red, that's bearish. Green, when it's bullish. All of these have minimums 70 to 80% probabilities that at least once per day they're going to get hit. And so then we match that with the potential false scenario. And this gives us that firecracker move where if market open comes to make a new in statistic high, so then we use the context of the highs of days and lows of days, we can see that we have an out of statistic high, market open comes up, makes a new in statistic high of day, break below. This qualifies for extended cash flow shorts for the false move. For all the opening prices, we have opening prices 3 a.m., 1 a.m., 2 a.m., midnight open. Midnight open did not get retraced on Friday, and it did get retraced on Thursday. So this is another thing I like to keep in my back pocket as we get closer into market open for a midnight open retracement trade, is if the previous day or days has failed to retrace midnight open between 8 and noon, these become even more important for the following day. Why? Because it's a little thing that I like to call the mean reversion of statistics. And so it's just a phenomenon that we see. I don't know why it happens, nor do I care, because it's so consistent. That's all I really need to care about. And that's when you have something that has a 65 to 68% historical statistic, right? It's a strike rate of something happening 65 to 68% of the time. When that fails 1 to 2 times in a row, you're mathematically due for a reversion back to the mean. Now, does that have to happen? No. I mean, you could go, we've seen Midnight Open fail 5-6 times in a row, but we go with the probability, not certainty. And the probability is it's going to mean revert back to that statistic, aka we're going to see a Midnight Open retracement more often than not after a couple failures. We got and yes, and we also do these streams. If you guys have questions, please ask them in the chat. We like to have a good time here, but we also like to make sure it's educational for anybody that is just sitting here that you're still kind of new to what we do. We do have one here. Candles, what's up, Dom? Dom says, question about the profiler, is Asia complete? We don't use the complete, so don't even worry about the complete. It's either all if it's not, if it's none, and then broken if it's broken. So don't worry about the complete button. I'm just reading some of your guys. Farm work, errands, hire the neighbor kid for leaves. Probies. Stu, are you a probie? Did some homework? It's another thing. So if you are new here, we have a pack boot camp. Okay, so if you want to understand what we do and learn what we do, scan that QR code in the top left. The next class starts in January. We're going to start accepting the people early in the next coming weeks, so you can start hitting the ground running before the boot camp starts. And Stu here will tell you, we take this very serious. It's $100 for 3 weeks. 3 months. 3 months. $100. People charge $10,000 for 369 bullshit. All right. Like 3 months of actual accountability into something that you can then take and go and do whatever the heck you want with it. None of it's proprietary. None of it is a black box. It is a skill that you can build upon and sharpen whatever your already perception of the market is. If it's ICT, if it's support and resistance, if it's harmonics, if it's whatever, you can already sharpen what already makes sense to your brain. But if you do not do the homework and the stuff that we ask you to do, because that is what's going to let you understand what we're doing. We don't just say, here's homework, go do it because it's fun. No, it's to get you those reps, to force you to have those reps. So that way, over time, this makes sense. If you're just going to watch videos, go on YouTube and just brain rot, right? Videos do not make you money. Videos do not make you better or worse. They get you familiar. Then you have to go and actually build on top of that. AKA, you got to burn some calories and you got to go and actually put in some work. That is what this business is about. We don't play. We don't treat this like a game. This is a professional business. You have to be able to put in the same level of work ethic to do and get the rewards of what a business would give you. You can't put in hobby level work ethic. You can't put in, I'll just do it whenever I feel like it, and then be upset when you're getting, I'll do whatever I feel like it results. It just does not correlate. And that's with anything in the world. But for trading, the reason why a lot of people treat trading like it's just this hobby is because it's very easy to get into. Anybody with a few $100 can start a cash account. Anybody with $50 can go get a prop account. Anybody can spend $20 on TradingView and get a free paper trading account. So the barrier to entry in this industry is so low, and that's what attracts people that treat this like a hobby, but they want the business returns. You cannot get both. So we put people in probation when they don't do the homework. So we either force them to do the homework or you're just going to sit and waste your $100. Good morning, Midnight Master. Absolutely, Candle Stalker. Good morning, Dave. Good morning. Good morning. Twist says, I'm going to do it again for the third time. Yeah. And I mean, you can, right? That's another cool thing that we have is when you guys graduate the boot camp, if you join the pack trade group, which is just the live trading component to what we do, and you maintain access to the tools, so the daily profiler, the indicators, all that stuff. If that's what you wish to do when you graduate, another added benefit to being in the pack is you can keep doing the boot camps. Like you don't have to pay another $100. You can just join the next class and then the next class and the next class, because we don't expect you to be professionals at the end of 3 months. We don't expect you to be these instantly transformed, profitable traders. Some people just need a little bit more training, and that's fine. Everybody has busy lives too, right? That's another completely valid thing. We totally get that people don't eat, breathe, and sleep the charts like we do. I don't have kids. People have kids. There's a lot of other things that I get it, that life just happens, but you got to give this an honest effort, man. And you have to be real with yourself. You just have to. You just have to. And yes, most groups will not hold you accountable, and they do not care if you learn. They don't. So to get into a little bit of the trade ideas that I'm looking for. So if market open locks in this in statistic high of days, so if we come up making a new high of day at market open, okay, and then we break below, I'll be looking for an extended cash flow trade to the downside. And then if we break to the upside, it'll just be cash flow targets. Cash flow targets. We got Midnight Master. Oh, hold on. I skipped one. We got Carl. Runners got stopped out. 287. Nice base hit to start the week. Let's go, baby. I still think P12 high is in the cards. I think P12 high is a good target, because obviously that's a new high of day, right? Midnight Master said already taken a $2,500 payout from being in the boot camp, and Midnight Master is already telling on himself because we tell everybody not to trade in the first month, phase 1, if not phase 2, the first couple of weeks of phase 2. All right. But we also get people with experience in the market already. And we respect that. Some people, some people are already even profitable traders, and they're just looking to further sharpen their edge and further sharpen what they already have and just add statistics to it. So if that's you, Midnight Master, I'm very happy for you. And so, yeah, there you, I mean, the success is in the people that we trade, or the people that we train. So I love seeing you guys win, succeed, be normal retail traders, normal Joes, and being able to pay bills, being able to, I mean, $2,500, that's bills, that's breathing room. That's, you want to go on a little weekend getaway somewhere. That's a nice dinner for your spouse. That's whatever, I mean, like $2,500 is nothing to just shake a stick at. That's what I love about trading, is we don't try to promote unrealistic expectations. We don't try to say that you're going to be rich and have these Lambos and all that stuff. We don't do that type of marketing. And AK, that's also why we try we're not as big as most of these people. But what we lack in that flash, we make up for in just the being realistic, showing you guys, like, you don't have to sit here and shoot for $1 million day, but you can shoot for a $500 day if the cash flow presents. And that's dude, $500 is, some people it takes an entire week to make $500. So I love this stuff, man. And we get really desensitized to money. When you're day trading every single day and you see like $200, $300 floating on your P&L, like, we get really desensitized to that. But in all actuality, would you just throw $200 in your trash can? No. So it's pretty crazy. It's pretty crazy how desensitized we get to this stuff. Dark Helmet, let's go. Yes, sir. I'm happy to have you here, man. Shag, good morning, bro. Good morning. Good morning, Winston. Instant coffee and Red Bull, dude. I'm about to. You're listening to uncaffeinated Austin right now. Probably when we get about 15 minutes till market open, I'll go make some coffee and we'll get it cracking. But right now, this is pure organic Austin. Shag says I'd redo it, but I can't keep waking up before the Well, you also can watch the videos too, right? So if anybody can't wake up early, because in the boot camp, there's class every morning at 5:30 a.m. EST. Then we do our normal live streams. Then we do p.m. session for the boot camp members. Then we do re-engineering session at 4 p.m. EST for the boot camp members. So you can also watch the recordings. You want a Lamborghini, you got to work for it. I don't even want a Lamborghini. Why is Lambo so? I just don't understand, man. I'm just not a car guy, though. Maybe I don't understand from that perspective because I'm not a car person. But man, I've never been Lambos, Porsches, Aston Martins, all this stuff, like just those high name car, BMW. I just don't get it. I don't get it. Dude, I bought a Kia Stinger, which was like the nicest car I've ever wanted, ever. Like I've always just not been that type of like material type of person. I just don't like buying expensive things that are just going to sit there. And I bought a Kia Stinger last year because it was just like the one thing I've always wanted. I've loved the car, and it was kind of this unique opportunity because Kia Stingers, they don't make them anymore. 2023 was the last model that they made. And it just so happened to be sitting at a dealership close to where I live. And I'm like, and dude, it was like super low mileage, like literally 5,000 miles on it. Basically a brand new Kia Stinger, fully loaded. And I was like, bro, I got to get it. I got to get it. And even then I'm just like, it's just a car. It's just a freaking piece of machinery that's depreciating as we speak. As I'm sitting here live, I am losing money sitting on a car that is doing nothing for me. It's fun to drive, but that's about it. I don't know. It's not a car guy. I don't buy fancy clothes. The most expensive watch I have is a Fossil. I like technology, I guess. I got a computer. I promise it's nice, as crappy as it may be. It's a nice computer. $5K is stick shaking money. What you lack in flash, you make in cash. Okay, that's actually pretty dope. 100% get desensitized. Oh man. Yeah, we do. We really do, Julie. Shout out to Julie. Julie's one of the people. Julie joined the boot camp last cycle. Went all the way through it, joined the pack. And then now so another cool little thing we do is the people that graduate the boot camp, if they want to and they want to volunteer, because we're like military oriented, Mick and I are both veterans. So when you join the boot camp, we call them team leaders, right? Team leaders. That's the lowest like position in a unit. And then you have squad leaders. And so squad leaders are in charge of the team. So, in charge of the squad. So we break you guys down into Monday through Friday teams with a couple squad leaders being in charge of each squad. So Monday through Friday. So team Monday, team Tuesday, team Wednesday, and so on and so forth. And so this is like a cool little leadership opportunity because we have people that graduate if they want to further refine what they're understanding, but also help people and they feel like they're getting it and all that stuff. They volunteer. And then over time, we have an incentive program where they're actually going to be in the pack for free if they stay consistent at being squad leaders to pull up the people that are starting. And it's like this really cool feedback loop that, there is no leader, right? There is no cult. There is no Kool-Aid drinking community. Everybody is leading everybody. Everybody is helping everybody. We are all speaking the same language. And because we can speak the same language in objectivity, there is no better. There is no, here's the hierarchy of what we do. It's Julie is the leader of her people, just like Carl is the leader of his people. You know what I mean? Like everybody just understands what we're doing. And so you can just help each other without being like, let's consult, let's close our eyes, bow our heads, and consult the almighty trader. Like, no, we don't do none of that. Trading Nerd says, you guys have me going to bed before my kids need to be in. And it's only temporary, right? It's only temporary. But that's funny. You know, another cool thing about waking up early is it is pretty contagious too. Like, it's pretty addicting. I know it sucks at first, but the more you do it, the more it's like you kind of hate sleeping in, because then you're like, dude, look at all this time I have. Look at all this free time I have in the morning. The days feel longer. You feel more productive. You feel better. Subaru Ascent, the Dadmobile SUV. I've loved the Countach. What the heck is a count? Is that how you spell it? What the heck is a Countach? Countach. Kantashi. The Lamborghini. Am I just, God, I'm probably embarrassing myself right now trying to pronounce this. Is it just like an older Lamborghini? Is that what that is? It looks like, you know what it kind of looks like? It kind of gives me DeLorean vibes. It looks like I'm about to go back in time if I drive that. I probably just disrespected every single like Lamborghini enthusiast. kind of looks like a DeLorean. It doesn't either. Technology does not agree with me. Oh man. So the SpongeBob foaming, if you're just tuning in here, the SpongeBob foaming at the mouth trade idea that I'm waiting for, I'm stalking, I'm watching, I'm being patient, is I want to see us have, like, this is just, I call it SpongeBob foaming at the mouth because this is what I would love to see. Now, could it happen? No, it doesn't have to happen. But what I would love to see is market open making a new statistic high and a firecracker to the downside where we aggressively take all these statistics. The other side of the coin, now this is where a lot of traders, when they build an idea for the day, this is where bias will screw you over so bad. So bad. And I hear so many people say, I have a bias. I have a bias. I have a bias. What's your bias? This is my bias. Why do you guys have biases on a market that changes in 5 seconds? This market can go from being bullish to bearish at the drop of a tweet, at the drop of live price disagreeing with what your bias is saying. You can sit here and go to the hourly time frame and say we're bullish or bearish, but it doesn't matter because you're trading a 1-minute candle, a 5-minute candle, and even in a bullish uptrend market, you're going to have pullbacks for your short sellers. And even in a bear market, you're going to have uptrends and shorter little movements to the upside for your buyers that are intraday day traders. So I'm being serious. I just don't understand why people give themselves a bias that you're only looking at this one thing. And if you don't see this one thing and it doesn't line up and it can't be this way, then you're just, what are you going to do? You're just going to sit here. This market is ever evolving in terms of it can be bullish or bearish. And so I like to give myself the other side of the coin. The other side of the coin is if we come to the downside and start taking these statistics, aka we mean revert before market opens. Well, now what are we doing? We're due for a new high of day if we want to statistically make a new high of day around the time to do so. And so if we make market open somewhere near the New York 1 low, where we start taking all these statistics prior to market open, my heart would be broken. I would be very sad. But what do we have down here? P12 mid. And so if we break to the downside, even if we do open up the market somewhere down here, I'll be looking for getting an extended cash flow target towards, and you guys heard Mickey say this morning already, anywhere between the P12 mid all the way to Asia OU. And the reason why we do that is because these statistics, these levels here, they act like checkpoints, you know, and when we don't marry these numbers. We don't marry the fact that, hey, we could go to P12 mid X amount of times, or hey, we could go to London OU, and then we just, you know, zone in on that level. But when live price is agreeing with that direction, these are the objective checkpoints instead of for just shooting for an arbitrary 50-point trade or 20-point trade, or it has to be a 3 risk to reward trade. We choose our targets because historically this is where price has been X amount of times. And so when live price is agreeing, aka look, we failed to make a new high, and so that's live price telling us right now we're rejecting this 420 high of day, 420 blaze it, baby. So if we're not going to make a new high of day, we suck back into the New York 1 range, come back down to the downside, and we do this second scenario where we open up the market somewhere here and then break to the downside. This would be my trade. And then same thing for the upside. If we open up the market, taking the majority of these statistics and live prices saying, hey, we're going to make a new high of day now, I'll be looking for that extended cash flow target for a new high of day. And that's what I'll be looking for, guys. So bottom line up front. Oh, I got to do my picture. Oh, there we go. So now bottom line up front. Okay. Market opens here. I'm shorting for extended cash flow targets or longing for extended cash flow targets for new high of day or for the rest of the retracement. Market opens here. Looking for extended cash flow targets to the downside or cash flow, normal base hit cash flow targets to the upside. And that's what I see. That is my ideas. I deny that there is a southern dish named succotash. What in the world are y'all saying? F-type R75 coupe. Let's take a look. F-type 74. Why do they make all these stupid numbers? R75. F-type A, B, C, D, E, F, G. Let's see. Ooh, that's nice. You know what this kind of looks like? This kind of looks like a Stinger. This kind of looks like my car. Not going to lie. I mean, obviously, it's not 100%. Like the back looks different, but the hood, the front of it, like the side profile, it kind of looks like my Stinger. I like that. I like that. That's a nice car. I don't like the price tag, but I like it. Look, we got 77 people in here, guys. If you get value from these streams, if you could real quick, just drop a like. And then if you really, really want to be pretty dope, share this with somebody that you think is struggling at trading, or as a friend, a trader friend that you think could benefit from it. A group of people that you think are struggling, anybody that you think is struggling that they could hear a little dose of reality instead of a dose of trust me, bro. This is what Mick and I are trying to do here, is we're trying to give realistic expectations to objective statistics. And so for the next like 20 minutes, if anybody has questions, or if anybody has if you're struggling with something, because I don't have too many talents. Okay. But one talent I do have is the ability to look at a system, see what is good and what is not, what is efficient, what's inefficient, look at it from an objective point of view and give you my feedback. Right. So if anybody here is struggling as a trader, if you're going through something and you want to be anonymous, right? This isn't Discord, so you can be as anonymous as you want to be. Drop it in the chat. If you're going through something, if you're struggling, if you are over trading, revenge trading, if you are doing something stupid that you would like my perspective on, because I don't give anybody advice. I would just tell you what I did, because we all relate to these situations. Let us know in the chat, and I can go through it, break it down. I can even show you real world applications of if you're going through something very specific, whether it's letting trades play out, whether it's being consistent at executing your plan, whether it's letting something creep in. I can even use statistics to show you how you making the way that you make decisions on this chart as objective as possible can even help with exactly what people complain about, which is poor psychology, poor decision making, poor understanding and expectations of where my targets and stop losses need to be. Statistics do a lot of cool stuff. What's up, Embarks? Good morning, bro. Good morning. Good morning. Appreciate the kind words, members only. Jesse. Everybody is a leader. I love that. Yeah. Yeah. That's what we want. We want a bunch of leaders. We don't want a bunch of sheep, a bunch of followers, a bunch of people that, I don't know, it has to check in with you to make sure this is real. Like, no. We like having independent people. It's a terrible business concept. Terrible business concept to build a business off of. Because, right, think about it. If you're a business and you want consumers or somebody to buy your product, you want to create enough need for that product to be consistently bought and sold, right? What Mick and I are doing is the complete opposite. We are building independent people that the Pack Trade Group side for the live trading and the tools and stuff, that is just there if now you want to be a part of what we do. It's not forced. It's not something you got to do. Drez, a brand new pack member here. Brand new here. At what point you discovered that doing the same thing works? This is a great question by a brand new pack member. I've never seen this name ever. I don't think I've even seen Drez. Like, this may be the first time I've seen him in a YouTube stream. So Drez here, guys, I'm joking. Drez is one of our pre-market traders. But at what point did you discover that the same thing works? When I got paid consistently off the same thing. That's a great question. And honestly, that's it. You know, when you're doing the same thing and you get paid consistently, like 2 to 3 times off of the same thing, not you get paid once doing this and you get paid another time doing something else and you get paid a third time doing something else, but the same thing. Okay. Whether it's midnight open and market open, these two moves I have obsessed about now for so long. And I have practiced the same kick now so many times that because I'm able to do that, I'm able to sharpen my edge. I'm able to obsess over my risk management instead of a new strategy. You know, I'm able to get even more intimate into my business instead of 700 different businesses. And it's something that really is just, it's pretty empowering, right? When you're able to not feel as if you have to learn anything else, build anything else, understand anything else. You're zoning in and going 10,000 miles into the same thing, the same discipline. It's like this peace of mind, because as you guys build and as you guys grow as traders, one thing that I can definitely empathize with is you constantly have this, and you guys probably relate to this. You have this demon in the back of your mind telling you that, what if this doesn't work? What if this stops working? What if you just got lucky and now the next time you do this, it's not going to work the way that you thought? Like, you have all these negative thoughts in the back of your mind. And if you don't have something statistically backed, at least for me, the fact that I can look back and see these statistics and the things that I use long-term repeat and repeat and repeat and repeat. Because I can do that, I have this peace of mind that I don't have to do anything else. I know that the highs of days and the low of days are going to be at the same times. More often than not, I know these statistics are going to get retraced. All these red lines right here, I know that these lines are going to get hit more than they don't, because from all of the in-sample, out-of-sample testing I've done, they've stayed consistent. I know these opening prices, because we range intraday more than we trend, they get retraced more than they don't. You can see in the past 16 days alone, this is all the probabilities of the past 16 days. I know that midnight open gets hit more than it doesn't. I know P12 mid gets hit more than it doesn't. I know when we make a market open move, I know that we hit 0.1% around 75 to 80% of the time, depending on your sample size. I know that we hit 0.5% around 65% of the time on average. I know that when I marry this objective zone of where price could just go without any other conditional statistic, just arbitrarily, this is a high probable price movement off market open from a statistical standpoint. And I know when I marry this zone with what live price has done in this current day, AKA the daily candle today has the P12 mid here, the midnight open here, I can form fit this box into expectations of where price can checkpoint based on these statistics. I know that this repeats this may not be profitable every day. There will be losing days, but this movement, this phenomenon, this repeatability repeats almost every single day. So when you have all these things that repeat all the time, because historically they do, it's not just I feel like I see it is happening, it's objectively there. You just have to manage your downside. And that peace of mind that managing your downside gives you is the biggest breath of fresh air I think any trader could ever experience, is just purely looking at this market and saying, dude, there's nothing else I need to do except click the button when I need to click the button and manage the risk when I need to manage the risk. When I'm not seeing it clearly, you guys may see it today. You guys may see it today. You guys may see me take a red day today, and I get to manage my downside for tomorrow. And every day that happens, yeah, do I get pissed off? Does it get annoying? Absolutely. I'm a human being. Anybody that tells you that red days are nothing to them is lying to you. It's infuriating. It happens, but it doesn't make me click the button. Those emotions don't translate to button clicks. They just translate to, let me go to the gym. Let me do a few more reps in the gym, a few more sets in the gym. And then tomorrow I get to do it all over again. That's it. So I know Drez was joking about the new part, but it is a really good question. What is the waiting is the hardest part of this whole process? It really is. Good morning, Ziggy. I like the username. Ziggy Pack Trades. The Matrix Bang, what is your thought on taking partial profits? I don't have a problem with partial profits. The only thing that I have a problem with, Matrix Brain, is break even trading. I'm not a big fan of moving stops to break even. I'm not a fan of moving stops at all. I think when you place a stop loss at where you have defined your risk, every single trade that you do where you're altering that stop loss of any kind, that's going to skew your expectancy and your probabilities and your outcomes beyond anything ever. Now, paying yourself, taking partial profits, I don't really see a huge deal with it. It's just really how you want to manage your risk. You know, it's like, it's not like a one size fits all solution. Some people and how some people trade, they just have to be a one and done trader. Some people, they have to scale out because their expectation of price may be a bit bigger. Some people scale out so that way they pay themselves, and so that way psychologically they can hold the trade longer without messing with the trade. So I think partialing isn't bad. I think my philosophy and how I look at managing risk in the markets, I think break even trading is more detrimental than beneficial, because as much as we can make the argument that, yeah, if it comes back to your entry, your break even, but the hidden killer isn't the break even. It's the expectancy that you rob yourself when price goes to break even to then go to your target. And you have to be able to quantify all of the times that when you move to break even, the money and the positive expectancy you leave on the table, because you can't just take a business expense. Like if you put your stop loss there, why, and you were already okay with that risk, why don't you just pay for that trade if you have to pay for the trade and really lose again? And that's why I like to call it losing against the winning team. I think when you trade to lose against the winning team instead of losing just to lose because your stop loss is 2 points, I think you really start to value the risk and the capital that you have a lot more, because sitting here looking at a trade and saying, well, I can just, I can lose cheap. Well, yeah, but those cheaps, $5 here, $10 here, $5 here, $10 here, that adds up, right? Dollars, pennies turn to quarters, quarters turn to dollars, dollars turn to $10. Like, these things add up. And so instead of losing 50 times for that one follow through trade to happen, why not position myself to where I can lose? I can pay for a trade without doing anything crazy, but it's me losing against the winning team. I am invalidated at the point to where if I'm bearish, this is now objectively bullish. If I'm bullish, this is objectively bearish. It's not based on my stop loss. It's not based on my dollar value or my points. It's purely, this is where if price comes into this area, I am wrong. I am on the wrong side of the daily candle. I'm on the wrong side of this hourly candle. I'm on the wrong side of the market open. I need to change. Moving to break even early robbed me of a great profit on Friday. It happens. I'm telling you. People want to sit and talk about it like, when everything goes good, that's when you hear people talk about it. Think about that. This is just a common trading thing. When things are going good, you hear people talk about it. When things are going bad, it's crickets. And the bad side of break-even trading is exactly that right there. You have positive expectancy on your side long term. The moment you change any portion of your business plan that causes you to rob yourself of the expectancy you've planned, aka moving to break even, that's all you're doing. You're bottlenecking your growth, because even if we look at this market as a coin flip, think about that. Even if we look at this market as a coin flip, and right here immediately as soon as price goes right here, we have a 50-50 shot of being right or wrong about expectations of this move. If I go to break even, the same 50-50 shot that I have of being right or wrong, you have a 50-50 shot of, is price going to come and break even and then go to your TP, or is price going to go to your break even and then go to your stop loss? You know what I mean? Like, it just happens. People don't want to acknowledge this, but it just happens. Sometimes the market it just happens. Has nothing to do with your edge, has nothing to do with a poor entry. It just happens. And when you bottleneck price, giving you that positive movement because you're scared of taking a loss, or you don't want to see a loss, I get it. We all want to say, well, no, it's because, this is where it should. No, you're scared of losing. You're scared of losing. Be real with yourself. Be real with yourselves. So many reasons why we want to over filter, and so many reasons why we want to say, well, no, I would do this, but not this. But, well, yeah, I don't like to trade on Mondays. I don't like to trade on news days. I don't want to do this. I don't want to do that. All of these things that you hear people say, they masquerade it with, well, we want to make sure. No, you just don't want to lose. Be okay losing. Be okay watching your freaking stop loss get hit. I'm telling you, there's power in it. There's power in not caring. All right, 5 minutes. I still don't have my coffee. It's all right. I think we're going to go into this just freaking no coffee, no caffeinated stream here. Excited to work on my business plan soon. Yes, sir. That's phase 3. Phase 3. Dave, scared of losing because you risk too much to start with. Exactly. But then, Dave, another part of that, I truly believe, some people just hate losing. It could be with 1 micro, the smallest unit of measure ever. And some people just hate losing. They're scared of just like watching price go against them. It's like this, and I get it. It's a human instinct. We don't like to be wrong because we associate that in our caveman brain with dying and not providing for our family. You know, we associate that negative emotion of being wrong with that caveman instinct of ancestral instinct, whatever you want to call it, with just not surviving. But we have to realize that that is not the case. When we lose, when we pay for a trade, we're protecting our downside to be able to provide, to be able to trade the next trade. And that's all it is. Winston, get this, dude. Winston, I need you to be my Red Bull man. When I have a physical trade floor, okay, when the pack HQ is built and we have a pack trading floor, Winston, you are the intern that will get up. No, I'm joking. All right, guys, 3 minutes till market opens. 3 minutes till market opens. Pocket said you can be the water boy. Gatorade. What's up, dude? You came back. Perfect time.
Dude, trying to get out of that was like crazy. Did you talk about the new thing that you were testing this weekend already?
Not really. I was just gonna
Okay.
kind of go over it if the opportunity presents, you know.
Yeah.
Because if we break to the, I mean, honestly, if we open up the market here, either side, I can, depending on market open size, I can qualify an extended target. But like, really, if we break to the upside, depending on where we open, to be honest, a long would just be a cash flow trade for me.
Yeah, because we're expecting that reversal.
Yeah.
Yep, I hear that. There's still plenty of distro, so yeah, that's probably the safer bet, especially from where we are and what we've done and the probabilities to the downside.
All right, 1 minute, guys. Dude, we got an intern, Mickey. You missed it.
Oh yeah,
we have an intern now. Winston is going to be our coffee intern for when we have a physical trading floor.
Nice.
He has a costume, dude. He said he's going to get a costume. He's freaking above board.
Costume.
Hired.
You just need a fancy suit.
Do we have Mr. Scott in the house? How the heck are you doing, Scott?
There he is.
What's up, bro? My God, it's been a minute. All right. Market is open.
Scott is definitely alumni.
He is. He must be protected at all costs.
Mm-hmm.
All right. Market is open, guys. First thing we do, we like to measure market open. So we want to see how large is this market opening range. Let it do whatever the heck it wants to do.
All right. We're making a pretty decent size one. It has 0.12 so far. What was that, dude? Did you just gulp coffee? That was the grossest sound ever.
I'm drinking the worst thing I've... Oh, dude, Alyssa gets me these juice shots. And this one's ginger and turmeric. Oh, my God, it's terrible.
Dude, that's like drinking canteen water on day 45. There we go.
All right.
So I
0.17%.
Yep, that's a pretty big range, so I have to wait for pullback.
I'm not taking this long, guys. This is we're making an in statistic high of day. If we get a close above market open, I will happily watch this go to the moon, because now where we've opened up the market and where we have a new high of day right smack dab at market open, if we get a close here, there's number one, this is just like Mickey said, it's a pretty large range, so I can't define my risk pretty well. But then also I have no expectation of price. I don't have any levels. I don't have anything that tells me, hey, this is where we can structure a trade. So I have to look at this as an example of, okay, do I want to make this habit? Do I want to make this trade 100 times over? No, because I have objective reasons for all these areas to come back to. And so I will happily watch this go wherever.
Yeah. This thing right there. So for me, I'm a little bit different. Like I'll wait for the 75 to get tested. Like depending on when we come back and test the 75 and 50% of the 930 high to low, like I'll consider then taking a long for 10 basis points. Right? Because for me, whenever the 930 is above 0.15%, like I had to wait for pullbacks. And right now it's 0.20, 0.17, whatever Austin said. And so like now I have to like understand that there's more edge in waiting right now than there's not, because we do have probabilities to the downside.
Yeah.
So I'd prefer to see us come retest this 75 or 25 and 50 level the next 5 minutes and then reject off of it to take any longs.
Well, and time's a big factor too, right? So
yes,
we stay above market open by 9:45 to 10. I will then be interested in taking this long, but right now this could just be one of these actions here. Boop boop.
and we can easily reject that 10 basis points in reverse, right? And this is where, like in the boot camp, you should be looking for that 4-step reversal, right? Which would be to the downside. So cash flow up until 9:45. Extended targets down to we'd get the 4-step reversal coming in. We're rejecting that 10 basis point right now. We thought we had a Q1 break to the upside. Yep, we did. Q1 break TP. Yeah, MA to MFE. That's the cool thing about what we do. Like I don't even have to pay attention to that stuff. It's just doing it itself. And that's pretty cool.
I got the gunship running in the background too, by the way, for today.
Nice.
Nothing's been executed yet. So if you guys do hear like order filled, order filled, it's the gunship. I'm not sitting here trading like a crack addict, I promise.
All right, so this 5 minutes couldn't even make it 10 basis points outside the 930. All right, and so now I'm going to be looking at the rejection around the 930, 50% to see if it wants continuation to the upside. If we breach that, then we're starting to execute like based off of the 4-step reversal that's might be happening right now. All right, new 5 minute. Yep. All right, because we took out the previous 5 minute high, and we're pushing out, now the next step is that, I'm expecting more 3 5 minute green candles, right? Because that's just what the statistics say for the 930 to 945, right? So now I'm on pause until 945. Yep. And the cool thing about this is telling us what to expect the rest of the day, right? Between 9:30 and 10:15, I'll take my trades, but I'm not in no rush to take them because I know it's giving me the clues and the statistical probabilities for what the rest of the day is going to go. We already know that we're in the body of a green daily candle, All right. So my job is to get good pricing and good statistics on my side to when I buy, right? Which is why when I do my war game and I point out London OU P12 mid, like that's where I really want to start buying like higher probable extended cash flow targets, right? Up here it's just cash flow longs. If I am going to take a long, very strategically where I can manage my risk.
These are also moments too, guys, that people start to sacrifice their rules for short-term gratification. So I'm sure we got 88 people watching. I'm sure there's a few people like, but I could have went long here, but I could have went long here, but I could have went long here, but I could have went. And you're in that caveman brain of, well, let me just sacrifice this one time. And then the one time, and then you have to ask yourself, well, now if I'm going to do this long term, am I going to make that sacrifice every single time? Am I going to constantly make these exceptions, or am I just going to stick to my rules and then just be chill, because these are the moments that people come back later and say, I broke my rules. I shouldn't have done it. Well, do it now. Do it in the real market when you have the opportunity right now to not do what you're going to do in a couple hours.
You can't find consistency because like you won't stick to one thing. Right. And that's one thing that I like to do. I don't like to be a reactionary trader. I like to be a proactive trader, right? Which is why I built this to make the same decisions. Whether it's an 05 box, whether it's 930, whether it's 10 basis points off of 930, everything I do is the P12, right, is the same decisions every single day. Because then I can focus on the pure performance of the strategy. Now, if something that the candlestick does, if I trade like that, then I'm more of a reactionary trader. And maybe today it does that action. Maybe tomorrow it does that action. But if it doesn't do that action every single day, then I have no ability to make the same decision every single day. So we use fixed constants, which is time-based, right? That way we can focus on sticking to our rules, because like when you use something that's reactionary, it leads to more discretionary decision making, and discretionary, position size, and discretionary, right? Like over the next 100 trades, like it doesn't make sense. You're going to have to expect that one little candle pattern to show up every single day to make decisions off of. I'm not in the business of making different decisions every day or making decisions while in a trade, right? Like all that should be predetermined in my way I trade.
Couldn't agree more, man. Dude, this turmeric and ginger is doing something to me. Oh my God.
Dude, I did my first healthy thing
Making
this morning. So I'm starting this new thing where I drink turmeric and lemon water first thing in the morning. Like one cup before I can have any coffee. And this morning was the first day, so I don't know if it's just like, I definitely feel 10,000 times better than before chugging coffee first thing in the morning.
The best rule of thumb is to
order submitted.
Yep, there's all the orders. Is at a minimum wait for like I think it's an hour after you wake up, so that way your cortisol levels go down.
What does cortisol do?
So like if you drink coffee as soon as you wake up or close to when you wake up, there's I forgot the name of it, but there's a receptor in your brain that is responsible for making you feel like happy or alert or whatever it is. And basically, if you drink the coffee that has the caffeine that messes with that receptor, if you don't let it just get out of your system naturally, it'll just keep it in there, and so you'll constantly have that like brain fog and fatigue. There we go.
And now
45 minutes, yeah.
Yep. So now what? Yeah. We're starting to approach max reversal levels off of the 6-9. Like, so if we expect this thing to turn around from a time and a price standpoint, right? Like, it needs to start turning around in the next 15 minutes. If not, we don't expect the false anymore. We expect the true, and we're getting a lack of 4 steps.
I know who the lucky botter is just by how they talk. Oh my God. I told you I didn't know all of it, bro. Come on now. Adenosine. Yeah. You know what I'm talking about. All right, 3 more minutes till 9:45 to see if we're going to continue or reverse. And then if we just continue to the upside, I will be looking at a 10 o'clock 05 breakout.
Yep.
Twist said it's bro size bull. That's funny. Oh my God. Scott, I missed you, bro. Missed your energy. And then Noman comes in and says, it's a natural Viagra. I didn't know that. Oh, dang it. I forgot the. Josh is going to kill me.
I'm short. What were you supposed to do?
Background music. He keeps telling us, and I keep forgetting.
Here we go. Never mind. Dude, we got a short true on Friday. Now we're getting signatures of a long true.
Yep.
It'd be like that sometimes in 15 minutes and 22 seconds.
Which means
25,
Tuesday
64,
pretty good.
1 minute. 1 minute. What would my risk be? All right. No. 1 minute. Let's see. Nope. She doesn't want to play. I was gonna start a position short because I could put my stop above 0.40. They never gave any displacement signatures to the downside. So still thinking about it, right? So my stop, if I do get into the short, would be 661, right? I'll cover risk at 610, right? But need at least a 1 minute close below the previous 1 minute candle.
Yeah. We're about to form that 9:45 zone, right? So we know
Yep.
that if we break below here.
Like it's right here, right now. We're in the 0.3 to the 0.4 up to 6.9. So this is the least probability. This is the last call for alcohol for sellers before we have to start accepting the true from a MFV breakout zone. A breakout MFV for that time frame. Nope. No signs. What was dude, the Back to the Future car, I love it.
Noman, what's your Discord name? The gym shorts will need to be. Who is this?
Oh, that's Stacks.
Oh,
Right, here we go.
Cracking me up, bro. All right, let's see if we get a close below.
Close below here. I'll be taking getting position size to ride 5 micros. All right, back down. I'll be coming on with 15 micros, and then I'm going to be covering 10 basis points below. Right, so I'll be taking 10 of them off. Maybe sooner. Let's see, and I'll post it in the chat, the trade as I take it. All right,
I'm gonna take it.
I'm short, right? My pay the trader line is 610, right? 610, right? My stop, my risk is right above the current high, the previous 1 minute candle high. Actually, see, this is where paying the trader gets sus, right? So my pay the trader line is at 0.40 off the 6.9 range. Risk is 727. I'm entering right now. Right, my pay the trader line is at 610, so we're approaching that right now. All right, so I'm going to take off 10 right here. I'm in, shit, let me screenshot this before I pay the trader. Let me post that right there. And then I'm going to pay the trader by taking 10 off, and now I'm 5 in. Right, so I collected 423 of cash flow. Right, shit. Let me put these on this chart so I can walk through them. Right, all right, and then so now I want you to pay attention to what I just did. All right, now I'll put it on my screen. Let me share screen real quick.
Yeah. It doesn't say you're sharing.
Oh, shoot, let me do that real quick. All right, so here's the trades I just took. Right. So we entered the 0.3 to the 0.4, which is the last probability for a reversal, right? That's me covering the trader, right? So I started with 15 lots or 15 micros, right? Right here, my risk, where's the fucking right one? There it is. That just happened really fast. There it is. So 15 micros was worth 727, right? That's my stop was at 0.40 right here, the extreme max of this reversal, right? 10 basis points below entry, right? I covered 10 of them, right? And that puts me in right here, right? Now my risk is worth 242. And then I was able to collect 423 cash flow off of that 10 micro, right? So now I have cash flow and I have the ability. So now my queen, which is,
my cash flow is done. Now I'm 5 in as well.
So now, like, we're sitting in cash flow, right, with the risk of, thank you, honey, of 242, but we've already collected that plus cash flow. So I collected 423 minus 242, so risk is paid, and then I got $200 sitting on this in cash of just it's just doing whatever, right? And that's how you use the dump pouch to position your trade. The only risk is, like, in the beginning, right? I was exposed risk 743. I was willing to cut it at the top of the 142, at the top of that 1 minute candle, just in case, like, I read it wrong, right? To reduce some of that 723 risk. But then I was still looking to see, like, is this going to reverse? That's when I have to make the real decision. If we breach that 0.40 off the 6.9 range, then it's like, all right, dude, this is going to be more of a long true than a long false, right? And so that was the explanation of the trade. And then now, like whatever, right? It can come stop me out, and I still walk away with $200 cash flow and be perfectly fine with it. All right. So that's the first class I teach you guys in the boot camp, right? And people sleep on it because I tell you for the next month, you're not going to think about trading. You're just going to learn how to properly position size, how to actually read a live market, how to align it with historical data. But now that we're coming up on phase 2, which is how to build trade profiles, measured and sync in risk profile with measured moves, right? This is when it becomes really important to do. Like, and understand that first class I taught you on how to use a dump pouch. I am sitting in a risk-free trade right now plus cash flow. I could care less if it comes stop me out. Now, how much piece on the chart do I have now? I have all the piece on the chart, right? So for 30 seconds, I had stress, and for the rest of the day, I have peace, right? And so that's because we're expecting the long pause to play out, and this is the time and the price that it needs to turn around if it's going to turn around. And if it can't, oh well, right? I get stopped out, and then I start thinking about 10 o'clock longs. Right? And that's how your mind needs to think. You saw me in Austin, both sit here patiently. The 930 move moved without us. Oh well, the risk wasn't accounted for. So there's no need to play when the risk isn't accounted for. And then you just saw me in 30 seconds, right? Take a position, right? And reduce the risk completely off. Right? That's how you're supposed to do it. All right, Austin, what do you got?
Yes, sir. No, I'm just showing what you're saying. Like, this is, you and I took literally the same trade.
And now, from a psychological standpoint, can I hold for that P12 mid? I don't have to hold the whole thing for the P12 mid. I can reduce some, or I can add to a winning position. If we decide to break below 930, I can do the same thing, bringing my cost average down. Right, so I can add to. If we get 1 minute closes below 930, I can add back to the dump pouch, bringing my business cost from here to like here, and then my cost is right above the 930 anyway, right? So if I add with 1 minute closes below 930, and the 4-step reversal happening, my cost average would come from up here to right around here, and then I can just do the dump pouch all over again with that trade. Now I'll be in 10, 1 mini to target 10 basis points. London OU or P12 mid, right? Most traders can't even get to the part where it's like, how do I add to a winning position? Because they can't cover their risk properly. They can't take a repeatable workflow, a fixed constant where they make decisions at. The same decision making me and Austin do every single day. Nothing ever changes with the variables. And the people in the boot camp or who have been through the boot camp see that.
Hey, shout out to Vlad. Thank you. I had 15 contracts sitting here to stop me out. Thank you for that. That would have not been fun. There we go. So another measured move that we know off this 945 is the MFE. And so if we break to the downside, the MFE would be down. If we break to the upside, the MFE would be up. And because we broke to the downside, we are due for at median. So right now we have done a portion of it, but we at median will make an MFE of 0.17%. And so we've already done, 0.14. And so this is another little area that we can use as an area of context that, okay, now, if we do come back into market open and we do the firecracker move that we're all looking at, obviously live price is not a fan of it right now. We're still above market open. But if we do that 945 reversal coming back into market open to these statistics, exactly what Mickey was saying, well, now I've gotten cash flow out of this move. I can get stopped out and still be green on the day. But and then I just go into 10 o'clock, 10:05 and get in the 05 trade for a continuation long. But if this is still an in statistic high of day and we respect this high of day, now I can sit down here and get myself out of the position once we come down here below market open.
What is this? The 6 to 9 range, the same one I talk about all the time with you guys. So now for that trade to work, we had to retrace 0.25, and have we done that yet? We missed it by 5 handles. So that's the breakout. That's the transition time from the 6-9 range breakout MFE to the MAE, and then the transition from the breakout. If we can retrace that pivot 0.25, then that's saying, hey, now the market's telling you there's more expectations. They start calculating the MFE for the reversal of the 6-9. That's so cool. So now, because we can retrace this 0.25% right here off of this pivot, more than likely I'll get stopped out, and that will just continue breaking up the upside.
But we don't move it to break even.
Yeah, there's no need to. Like, who cares? Like, this is the line in the sand for a true versus a false anyway. So, like, my stop is exactly at the location where it's like, dude, you've got more clusters that say you'll go higher than lower, right? So it is what it is, right? I know I'm structured at the invalidation of this false now. And this will just be one of the days I only make $200. Wah. That's piece on the truck.
All right. Check this out, ladies and gentlemen. Stopped out of my final position. And we are up 300. Where's it at? 357. 357 on the day.
Just so you guys know, my stop is still at 660, right above this 0.40. And if I get stopped out, 423 minus 242, so I'll be up like $215, something like that. All right, just to show you, I'm about to get stopped out. Once it crosses that red line, I'm down 242 or whatever 423 is. In the Lucid funding account. I hate it when it waits for the last minute like this. What the crap? This is nonsense. It's almost 10 o'clock, dude. But now, like, obviously, like the 9:30 to 10 o'clock, I do take shorts based off of the New York one, but we already know that that low of the day is high probability. So at this point, my job is to find areas to buy dips. My job is to be a buy the dipper, not sell. Oh my gosh, I've never been I've never been tick denied on a stop out.
If you get tick denied on this,
That's pretty cool.
Beautiful.
That's pretty cool. That's pretty cool, dude. I'm gonna laugh so hard if I get tick denied. That never happens to me. I'll get tick denied a million times on TP, but never on stop loss.
I know. Yep. Have I ever told you guys how much I genuinely hate NinjaTrader? Like I don't think I've expressed enough at how much, like, it just does things that don't make sense. Like it just, ugh. All right, I'm even going to get into it.
All right. So right now we have the alert of a footprint rejection. Confirmation will be previous hour 50 and 10 basis points breakout out of the 05 box. And I'm still in this trade. crazy.
I mean, if this 10 o'clock fails to take the 9 o'clock high, you're freaking golden, bro. Dude.
I keep thinking of like this Bill Nye the Science Guy.
Uh-huh.
I just when he's like, it's science.
Dude, I hope we crash down just for this moment.
Well, statistically, we do more than we don't.
A 9:59 high of day with a one tick miss of the stop loss. Like, dude, you couldn't have you couldn't fake it.
Off of the same thing that we teach over and over again.
I will say, from my perspective, guys, if we do get back below market open, because I've already gotten paid on this trade, if we get below the 05 box of the 10 o'clock hour, I'll look at getting into a short or honestly just being patient and waiting for us to get back below market open if we're going to start the reversal. This all goes out the window if 10 o'clock takes 9 o'clock's high. But the fact that we've rejected, even if it's a couple points, I mean, this is still, we've seen this many times. If live price fails to take this 9 o'clock high, and then we get below the 10 basis points of the 05, trigger number one of, okay, this could be the short, and then obviously confirmation is below market open for the rest. This could be that wet wick.
Wet wicks is more like after 10:15. It's like we expect this move like 9:45 to 10 does it like 1 to 2 times, once a week maybe. 9:30 to 9:45 does it the most 2 to 3 times a week. 10 to 10:15, it's like once every 2 weeks. 10:15 to 10:30 is once a month. 10:30 to 11 is like once every 3 months. It's crazy. So the wet wick would be like after 10:15. It's like it's so rare that it happens. Remember, 10:15 is like when everything just drops off and it's like, oh, like we ain't going. Like start bidding it up or offering it based off the daily candle.
Scott, so you know how we call it the firecracker, right? You've been around long enough to know what that is. So we've coined a new fun term for the days when we don't just make that clean follow through right away of firecrackering. We do some weird little nonsense and then we firecracker. It's like as if you were to, wet the wick of a firecracker and it just is delayed. That's that's what we mean.
And life TP is when like your wife of 20 years still brings you breakfast in the morning.
Heck yeah, dude.
I know all the anti-masculine people out there hate that, but shit. I take care of her, she takes care of me. What it is. It's a cool thing about like Southern women is that like nobody in my house goes hungry ever.
Yeah, that weird wokeism is fucking retarded.
Yeah. Oh, we just got flagged on YouTube because they're a woke company.
God dang it. God.
All right, guys. We're probably going to be going back to the Discord next Monday.
Take your vaccines.
Well, we're going to have to jump over to my channel and start doing it over there. Austin just crashed down. If you can talk about Greta a couple more times, like on the lives, then we're definitely still in the deal.
All right, this is the 10 o'clock 05 box. From here to here. Okay. So now 0.1% below, 0.1% above.
Dude, the market is playing with his food right now. Stop me out already.
How dare you? So
Breakfast
this
in
is
bed.
a
No,
this is a
bro.
public service announcement for anybody that uses Tradecopia. I have now learned this hard lesson 2 times live with you guys. Happened last week and it happened today. If you use Tradecopia to copy your trades over to other external accounts, whatever, and it's a Project X account, do not have the trade copier enabled on Project X. So like, you know how you can add like 2 or 3 accounts, whatever. Don't do that. Clear it out, because I accidentally left it on, and I'm sitting here looking at my Tradecopia account wondering why I only got this profit on one account, and that's why, because for some reason it kicks back the trade. So that sucks, but is what it is.
Yeah, I love what we have going on here. You do all our technology stuff because you're younger. You figure it out and deal with all the issues of it, and then you're like, "Hey, Mick, just do this." And I'm like, "Yeah."
I'm the lab rat.
Literally. In the army
Literally.
you were, and now in
Yeah.
trading you are.
Literally, yeah. Yeah, Project X sucks, dude. I don't know what Michael Patak was smoking.
Yeah. It's one of the easiest platforms to do stuff on if you're just a linear one account trader.
It's easy, but the amount of problems it has is what's it starts to get annoying after a while.
Yeah, that's true.
Well, and then too, like, you know, you can't just come out and say something's revolutionary and all this stuff, and this is it. I get it.
It's like
products have bugs.
You never buy it in the beginning, right? You got to let anything, whether it's a car, new technology, anything, like, you got to give it 6 months to work its shit show out.
Yeah.
And by that point, it's gone through 2 quarters, and if it's going to make it, it's going to make it. And you stick with it. If not, it will just go away. What blows my mind is how these other brokers are still in business.
Dude,
Like
I don't
Bankers
know.
Home or like IBKR. Like, I don't know how IBKR is still in business, other than they shoot for more business-to-business contracts, not retail to business.
Yeah, they have to just completely not care about the retail trader. I mean, dude, their platform is terrible.
I'm definitely seeing the rejection out of the breakout, possible Q1 highs being put in the 10 o'clock hour. Stops in the same location as always. And, you know, we need to start closing below the open 10 o'clock opening price in the current hour is 50% and start pushing down. This trade's going to work. Now, obviously, Q2 is important because it will validate if I'm going to get a Q1 high, Q4 low for 10 o'clock, or vice versa to the upside. And at this point, like, if I was to take longs, like, I'm not going to, because like at this point, like, I've already been in this trade so long, there's no need to jump out of one trade and go into another. For me, I'll just wait for 12 o'clock for any more trades. Because if we are going to go long, it's felon to come on back down to an area that I would like to trade. Right now, if you're in the boot camp, what daily classifications do we have right now? Right here, right now. And why? Based off of how we moved away from the 930, what daily classifications are we anticipating? In which direction?
10 o'clock high.
Nice, I'm still in this trade. It's about to stop me out. This would be the ultimate take denier. I wanted to take me out so I can flex on it. I still make cash flow. right, let's see what the people in the chat said. Not DMP, DWP. DWP in range 2. Why? Why did I say DWP in range 2? Did we forcefully move away from the 930? Did 945 fail to come back to the 930? Which one? What do we expect an afternoon range or afternoon reversal? All right, we're trending up. All right, so we're either gonna spin the afternoon range into settlement, or we're gonna reverse going to range 2. All right, here we go. This is me getting stopped out in 5, 4, 3, 2, 2.5.
Oh my god.
And 1/4. 2 and up, and I'm stopped out. Collected 183 of cash flow unfunded from that trade. $183 secured. Not big money
for me.
Dude, oh my gosh, if they turn it around right now, I am going to say that the market makers are hunting my stops.
Yeah.
Obviously. Obviously. Yeah.
Valid response.
Okay, let me ask the chat. What can you spend 183 on? Right? Maybe I can be done for the day. What kind of bill can you spend 183 for? Does that cover your cell phone bill? Right? I didn't get the home run trade I was expecting, which would have paid a lot more, but is 183 enough to apply to your budget? You know what I'm saying? Stop falling for the fucking shenanigans that you have to make $10,000 a day. That's putting unnecessary stress on your life and on your trading. And it's not realistic. It's just ain't really, what the hell? Oh well. Mountain Dew for a week? You spent $183 on Mountain Dew? Are you serious? Like, seriously? Miller, we gotta talk, man. We need to get some turmeric in ya. Oh my god, this is stupid. Now,
oh no. Oh my god.
I'm about to slam it. Just kidding. I'm actually gonna lock this account up and jump to another account.
Order canceled.
I had that on my live account too. God,
It be like that sometimes.
I'm telling you, man. What a cunt. Where's Josh at? I'm gonna go cope with Josh.
Josh, we need you ASAP.
All right, new 15-minute open. We're saying, can we get, is this a Q1 high that took my stop? Or I would prefer that it just makes a new high, just so I feel better. But obviously, daily momentum's up, 4-hour momentum's up, all momentum's up. We cannot get the reversal. We're above medium MAE from a 12-hour approach, right? So, right, this Q2 will show us the next 2 hours, right? And so far, like, this is what I want to talk about, right? So everybody who's a raid trader, like they do turtle soups, they do raids, they do whatever you want to call them, taking the highs, whatever, right? Like, they're short right now, and I totally understand why, right? But we know that, right, there's plenty of times that the market takes the previous hour high, sucks back into the range, and then continues going higher, and vice versa lower. So what we taught you today is if you are a day trader or super or sweeper, whatever you call it, right? We just taught you a way to continue trading that way, because what we do know, we know two things to be true. Reversal traders get stopped out more, way more, a lot more. So now you have a way to go into risk-free trading without taking all the stops on the face, right? And by the way, the dump pouch, which is the indicator that I use to let beginners use to understand this concept. Once you get good at it, you don't need the indicator anymore. If you look up dump pouch on TradingView, it's a free indicator that's open to the public. And then if you go under my pinned tweet, right, I explained to you how to use it and what the math and the concepts of paying the trader is, right? So if you like how me and Austin position size today, that's your first step is, and you want to incorporate that into your trade plan, right? It's all free to the public and available for you to use. Why isn't Mickey going short again, right? Because I'm outside the window of opportunity to take shorts, right? Data has already fallen off, right? We still can go turn this thing around right here, right now, especially if we made a Q1 high and a Q4 low for 10 o'clock. But now I've lost the edge of data. And so now I have to ask myself, over the next 100 trades in this exact scenario, would you take it again right here, right now? No, I wouldn't, because it would be a 50-50 bet.
Yeah. The only other trade I would look for is if we do follow through with this hourly candle, getting back to market open, and then we break below.
Yeah, I'll take that short. The London OU. If we get below market open, absolutely. So now for me, it's like I'll wait for 12 o'clock for longs, right? So I can have more data on our side. But if we do get below market open, we've pretty much completed the 4-step reversal. And then I'll just be a seller for the rest of the day. Down to those P12 bids and all that. There you go. Q1 high, just take my stop. And now we anticipate a statistical Q4 low.
As long as we don't get this little suck up action, because we see this a ton. Take Q1 low, immediately sucking back into the range. This is giving us a doji / reversal / lack of follow through, and there we go. So we sucked back into the range, and so now I need to see it close.
You've got to get below previous hour 50 for this to be anything, right? If we start sucking over what Austin said, then this is fake momentum down, and the market's showing you its hand, believe it or not. Now you can expect more trend to the upside. But this previous hour 50 right here is what I would expect to breach before expecting 930 low, expecting London OU, P12 mid. But yeah, that's not a good sign. Okay, so let's talk about this. We start breaching out, right? Every single body who took this sweeper or this raid or whatever we want to call it, right, just got stopped out. That's a live market saying every time the sellers step in, we stop them out instantly. We destroy their souls. We put a sledgehammer on their neck, right? That's a signature for DMP, right? So we'll keep that in the back of our mind. In the next couple of hours, we'll be expecting the previous hour's 50 to hold. If it keeps showing that signature to us, which is going to give you the clear to buy 05 box breakouts to the upside. And you still got New York 1 distro that supports that, and daily distro that can support that as well.
I mean, the final high day projections, what, noon for a long true?
Let's see.
13 to 15? 13 to 13, 15?
Let me redo it. Profiler. Long true none, long true none, and long true. So yeah, more probability of an end of day high day than anything, but we start seeing like secondary mode around 11 to 11:15. That'll support a 3rd hour effect for this 3 hours that we're on. But the mode to median is right here. You can see all this data starting at 1500 right here. So 4% there, 5% there, 4% there, 4% there, 12% there. That's 30% sitting on high day at 1500 for a true. Doesn't mean you're going to go straight up. You're going to see a lot of this kind of price action where if this is a DWP, this hour will just hang out in this hour's range. The next hour we'll just do some stuff like this. And then we might range for the afternoon until the power hour where we just spike higher. Right? This is why we split up our New York session into 2 sessions for probabilities and for confirmation of data. Right? And farther back, anybody who does any kind of forecasting or statistics, you know that the more checkpoints you can have the near-term targets, the better the outcome will be, right? So we use New York 1 from 7:30 to 11:30, and then 11:30 to 1600 for the afternoon, right? Because if I just used New York 1 from 7:30 to 1600, my probability of being wrong, or what's it called when you land nav in, the natural drift, right? You naturally will drift left or right too far from being anywhat right. So we put a checkpoint, right? A checkpoint in the middle of the day to say, hey, this is what we want to stop, fill up our canteens, recheck our data, you know, and then from there we can have it the whole same that we do 9:30 to 10:30. We can do the same thing for the afternoon session.
Yes, sir.
I don't even think they're watching this anymore, dude. You want to cut it?
I took a long off this 05 breakout.
Nice. Hell yeah. Yeah, I mean, that's really good. You taking it for cash flow 10?
Yep.
Nice. Well, you have Q1 right to the upside that supports that as well. And you got Sam Jackson. Holy cow, you got Sam Jackson that's about to confirm too. In 12 seconds. Good trade, dude. Is that one of your thought processes behind the long was the Sam Jackson?
It's the fact that we failed to make a Q1 low, like that sucking back into the range, 10 o'clock taking the high. So we're due for a more bullish movement than bearish movement now. Out of statistic high of day for the daily profiler.
Yep.
I think this was all signs, you know, for at least a cash flow move.
Absolutely. Hell yeah. So that signature right there, breaking Q1 high, right? Now I'm definitely expecting, you know, to buy the dips the rest of the day from here in whatever range we get. So like, just like for the more riskier consumer, right? You could have bought the spike back, the suck back into the range. For the more data approach consumer, like you do the 05 breakout, or you're lining up with like a gunship movement like you saw Austin do. Let's talk about the rewards of both, right? And the pros and the cons of both, right? If I bought the wick of that 05 breakout in Q2, right? Yeah, I get the pros is I get to stop myself below a 1 minute candle, right? Because that's literally the invalidation point, right? I get better pricing, but The con in trading that way is we have 20-year data that says when we make a Q1 high and Q2 breaks the low, it's more likely to continue down. So you need to look for an if-then statement that invalidates that statistic. What is that sucking back into the range and breaking out to the 05 to the other side? So Austin just displayed an amazing trade, an amazing way of doing it, finding that if-then statement, lining it up with statistics, and then taking it with the daily candle.
Well, another part of this too was like the risk was really good. The size of the 05 was only 0.11%. So like I can define my risk pretty well, you know?
And so you could do literally the same thing we do at 9:30, right? That's why we use the 05 box, because they're usually around the same size of 9:30 on most days, and you can define your risk. That's just a beautiful concept.
We got the lucky botter in here talking about the Josh box.
Is that Josh, the lucky botter?
Yeah.
I figured.
We got 3 minutes till the next 15-minute candle close, but we got to close for Josh. We have to close above this high.
Hold on, dear life. Oh, poor Josh. Poor Josh. Is he selling the retracement?
No, he's buying. He's
okay,
just
good.
He's got to
good,
wait.
good.
He's got 2 more minutes.
And then he goes long for 10 basis points. Yep. Good. Let's bring it back down to the 50. This hour's 50, and then that way you get good pricing. Josh. I'll sacrifice some drawdown for Austin's trade to get you in a better position.
The high at 640. I think that's what I have, right?
Mm-hmm.
640. That's all the way down here. That's not
that's
right.
That's where he wants to enter it.
Oh, I got the range wrong. My bad. It's this high. Okay. Never mind. So he's entering arbitrarily here in a minute anyway. Okay. I was keying off the 10 o'clock high. My bad.
So, like I said, I'm flat until 12. It's not because I don't believe in Austin or Josh's trade. It's just that's not my business plan. That's not my trade plan, and nowhere do I have a trade plan for that, nor have I collected the data. Does it mean that they haven't? No, they definitely collected the data. It's another aspect that you got to realize as a trader is you don't have to trade everything just because you have the data on it. And if it's not in my business plan, I don't trade it. That'd be like saying Austin has a furnace store, and I work on air conditioners, and we're pretty reliable when it comes to doing the same things. But he pays his employees $10 an hour, and I pay mine $15 an hour, and I should move my employment down to $10 an hour just because he does. No, that's not how business is done.
Uh-oh. I don't know if Josh got a trade.
Oh,
I think we closed perfectly under.
I told him I'd bring it back down to the previous hour, or this hour's 50. Can't help it if he didn't take advantage of it. I literally gave him the perfect entry. Now, if we sell off now, this would be a wet wick for sure. And this is the lowest probability.
Yeah.
All right, let's see. Oh, you just didn't make a new high. And you're TP'd, right?
670, 650.
650. Yeah, okay.
1% off that break.
That's easy. How many contracts?
So I have 12. So I'm scaling 10 out at 0.1%, which is just the cash flow. And then I was going to leave 2 micros on, but we haven't even gotten 0.1% yet.
Remember, this is just a new 15-minute. Right? If we truly have directionality to the upside, you would do that in a couple minutes. And you got the Sam Jackson on your side, so the previous 15-minute low is the MAE of that, so right around here on the other side of this 05 box.
Yeah, it's like right there. Yeah, at 677.50.
All right, in the chat, let's talk about put something that you learned today. What did you appreciate about this? Even if you knew it, if you learned something new, put it. If you appreciated something or you had an aha moment, put it in the chat. The only way we get better is feedback from the viewer. I know a lot of you guys are members already, and you sit here and listen to the same thing over and over again. But still, like, it's always better to see it live. Oh, Josh was selling. It's right, TP. I don't know. Oh, because he's going 0.05 more than likely. I don't know.
Yeah, Josh, you lost me. I don't know. I don't know what you're doing now. 15-minute. But you never got a close. Did you? I don't know.
Coffee and Project X of shit by Scott. Turmeric is toxic by Danny. No, it's not. You just have a weak mouth, boy. A dump pouch for the win. Ziggy. Absolutely, Ziggy, man. Like I'm telling you, there's a reason that's the first class I teach. Because no matter what kind of trader you are, that's going to do nothing but help your edge. Brooke, appreciate your dump pouch demonstration. Party mouth. I love having Scott back.
Oh, man. I think this is about where we're going to probably end the stream, guys. 10:34. We got ambiguous hour coming up here for the pack traders. You guys know my positions here. I'm trying to get this cash flow move off the 10 o'clock hourly candle 05 box. Failed to get even 25 points. So if we do get stopped out of this, I'm losing against the winning team, aka
one thing you could do, instead of shooting for 10 basis points, because we know the 10 o'clock's already in the doji formation, like cover the trader at 5 basis points, right, to reduce some of that risk and then leave the rest on.
Yeah, but I put my risk this way for that 0.1%. You get what I'm saying?
Yeah. Yeah, because your stop's below Q2 low, right?
It's below 05.
Okay.
Yeah, I can't really afford.
Yeah, you can't. Yeah, you can't do that then, because then it would completely throw the numbers. Now, if you were like, the cool thing about trading that way is like, let's say your 5 basis points stop, 5 basis points pay the trader, and you get confirmation. Like, let's say we did get a proper Q1 low, right? And you're buying the 05 breakout, then you can move your pay the trader line to like 10 basis points and collect more cash flow, because you have a stronger statistical probability of making it to that pay the trader line. But in this case, like, you got to just stick to what you tested at this point. And you got more. You got way more probability to hit that Q too high and make a new high than to make the new low.
Yeah. No, I love the 10 o'clock. The 10 o'clock 05 box is like, if I can't get a market open trade, it's my next major thing.
Yeah, man.
I just don't really get it a lot because my market open's done.
Yep. And so that's a cool way of before we leave. I think this is important for people to hear over and over again.
Mm-hmm.
So Austin has used the same account, been very transparent with all his accounts. He pulls anywhere between 6 to 20 on prop firms every month, right? Shows it all live, shows you all the account statements, blah, blah, blah. Right? So now I'm going to ask him this question, and hopefully this will be the ultimate aha moment. And I already know the answer to it. So Austin, do you trade the 930? Did you just cock your gun at me? I'll go get my machine gun.
Dude, what?
I just heard that pistol cock. So do you trade in one day? You try to trade the 9:30, the 9:45, the 05, 10 o'clock, the midnight, all in one day?
No, it's just, I'll take my midnight trade, then I'll take, if the midnight trade is on, like, let's say, because I treat my accounts like a portfolio. So if the midnight trade is setting up, if let's say I have 5 top step accounts, I'll take the midnight trade on 2 to 3 of them. Then that leaves me other accounts for, let's say, the market open trade. So it might be Lucid gets a couple accounts exposed to it. Alpha Futures gets a couple accounts exposed to it out of all of the accounts I have with them. And it's just that's how I do it. So that way the risk is diversified. It's never every single trade I take is across every single account. And it's also not every single account within the portfolio is just getting the same trade. It's every day it's cycled into a new account. So not a new account, just another percentage of the portfolio.
Exactly. So before you cut it, I do want to say Happy Veterans Day. I know it's tomorrow. We won't be live tomorrow. We'll be in the Discords trading. If you're a veteran, right? Doesn't matter what branch, doesn't matter what job, you had the balls to sit there and say, I know the risk is that I could die for my country. Right? Whether you went to war or not, you had the balls to say, I'm raising my right hand. Worst case scenario, I die. Right? And that's huge. That speaks volumes of your character. Right? That speaks volumes of your values as a man or a woman. That speaks volumes of you as a person. So from the bottom of my heart, whether you're in the US Army or the military service anywhere, like you said, I'm willing to put the bigger cause before my selfish personal needs. And so from the bottom of my heart, I thank you to all the veterans that served.
Absolutely. I forgot it was even tomorrow. Oh my God, dude, time's flying by.
Yeah, it is. Next thing
Looks
you know,
like
it'll be
out of this 10 o'clock trade.
Next thing you know, I'll be heading up there to help you move. And we'll be sipping on cocoa and listening to Mariah Carey Christmas.
All right, guys. Yeah, it looks like I'm going to get stopped here. We're not showing any signs of strength above this 05. Is what it is. Couldn't get the follow through on the short, so got cash flow on the short. Couldn't get follow through on the longs, even though we're literally showing pretty decent signs of a continuation. Just maybe the market can be irrational with my invalidation longer than I can be solvent, right? So I'm going to just take this and is what it is. Hope you guys have a wonderful rest of your day. If you guys tuned into this stream for the first time, hope you found it valuable. If you did, hit that like button on the way out. Stay grinding on your goals and never, ever, ever let anyone tell you that you can't do something they never done themselves. And I'll see you guys later. Bye, everybody.
Bye, Anderson.